Today, I'm going to discuss the coming exponential silver price movement. Hello, this is Steve Sanangelo of the SRS Rock Report, and in this video, I'm going to explain the two reasons why I believe we're going to see a big move in the price of silver. Now, the first reason has to do with the increased negative systemic risks associated with the financial system, and those risks are increasing every day. And the second reason, which I believe is the more important or more permanent, has to do with the big problems we're now facing with energy, as energy is the main driver of the global economy and the financial system. Now, the first series of slides are going to focus more on finance. And this was a recent YouTube video by Mike Maloney and Jeff Clark at Gold Silver called The Coming Silver Price Shock. If you haven't seen the video, I recommend it. Now, what was interesting, Jeff Clark was at the Vancouver Resource Investment Conference, and he said that attendance and interest in silver had increased compared to the previous years. And what was surprising, during Jeff Clark's silver presentation, it was so well received, it was standing room only, and people were lined outside the door in the hallway just to check it out. Now, Mike and Jeff discuss in this video, will there be another silver price shock? If there's a financial shock, then yes. And these are some of the reasons why there would be a financial shock. And they discuss the derivatives of the 9 largest banks being 230 trillion. Global debt now is 322% of global GDP. US corporate debt is 10 trillion, up 50% in just the past decade. And then private debt is now ballooned to 1.2 trillion. So Jeff and Mike are discussing that it's these negative financial reasons why we could see another silver price shock. Now, what's interesting, this next gentleman isn't a precious metal guy, he's a financial guy. Now, maybe many of you have already seen this video on YouTube. It was Scott Minerd, who attended the big meeting at Davos, Switzerland, of the economists and financial guys. And during this interview, Scott Minerd basically said the market was a Ponzi scheme. And at the end of the interview, this gentleman asked Scott what his conviction trade was for 2020, and he replied, silver. They then asked Scott, they said, could silver go up exponential like we have seen in some of the non-precious metals, like palladium? And Minerd's reply was, I think there's a high probability of that. Now, what's interesting about Scott Minerd, covered in this CSQ magazine article, after achieving incredible wealth on Wall Street, Scott Minerd retired at 37 to live in the California dream. Nearly 2 decades later, the Guggenheim Partners Global Chief Investment Officer has achieved a new level of success, motivated by a broader set of objectives. Now, Scott Minerd started his financial career trading bonds for Merrill Lynch, and then he moved to Morgan Stanley, and he ran the credit trading in Europe. So basically, we got a financial guy here. And now this is Scott Minerd's views on investing. What distinguishes Minerd as an investor is he tends to be patient and methodical in his analysis and doesn't make snap judgments. We tend to marry views for a long period of time, and I prefer to look at the big underlying trends or themes, and we take those themes and play them out. Now, Scott said in his interview, the reason why he was a big believer in silver than gold was because silver was undervalued much more than gold. And if he's thinking that the market is a Ponzi scheme, silver is not just a trade, it's a more long-term investment. Now, if we transition from the financial to the energy, I'll show you why it's so important. This is a recent chart I put together on total US public government debt versus US GDP. The blue line is the US GDP, and the last fourth quarter of 2019, it was 21.7 trillion. Now, what's interesting, the US public debt was below the US GDP, and then it went above it about 2015. It's now at 23.2 trillion. So the US public debt to GDP is now 107%. But this is only part of the story. It's much worse. If we include all total US debt, all sectors versus GDP, Americans hold 75.2 trillion in total debt versus the 21.7 trillion in GDP, which means Total US debt to GDP is now 346%. Now, what's interesting, if you go back to the 2008-9 financial crisis, silver surged during the time when the debt stopped increasing and we had the GDP leveling out. So this is what people need to realize. It's not when the debt was increasing that the silver price surged to 50, is when the debt was starting to level off. Now, why is this important, this GDP? Well, as I explained in my recent video, this was a presentation by Jean-Marc Jancovici up to the OECD, why energy is impacting the global economy. And he showed this chart. And the red line shows total world oil consumption on a 3-year average compared to world GDP per capita, 3-year average. And what we can see, as global oil consumption increased and decreased, so did the GDP. It goes hand in hand. And so we have to understand that oil production growth allows GDP growth. Now, why is this important? Well, over the last 10 years, the net change in global oil production from 2008 to 2018 versus growth from the US and the United States. Of the 11.6 million barrels a day of total global oil production growth, 8.5 million barrels per day was from the US, most of the shale industry, and 2 million barrels a day were from Canada. The rest of the world only added 1.1 million barrels a day. So what this shows us is the overwhelming majority of oil production growth came from the United States. That means the United States was responsible for most of the global GDP growth. Now, this is not a good thing because the top 4 US shale oil fields in 2018 declined 44%. And that's only in 10 months. If I show you the chart, and I get this information from shaleprofile.com, it's an excellent website. They have, and service, it's a paid service. They have information on over 100,000 horizontal shale oil wells. And this chart shows the top 4 US shale oil fields' total production and decline rate. Now, in December 2018, it reached 6.6 million barrels a day. And by October 2019, right here, it had fallen to 3.6, 3.7. So just in that 10-month period, the top 4 US shale oil fields lost almost 3 million barrels a day. That's 44% decline. Now, this next chart, if we give it the whole year, it's about 45%. That's conservative. It's probably higher. But this is what's very interesting. The top 4 US shale oil fields decline rate versus the global mature oil fields decline rate of 4% is 10 times faster. Again, this is from the IEA, and they estimate that the mature oil fields in Saudi Arabia across the world are declining about 4% a year. But the US shale industry is declining 45%, 10 times the rate. So we have to think about this. This 8.5 million barrels a day of oil production growth that has allowed global GDP growth is based upon a nearly 50% a yearly decline rate. And at some point in time, US shale oil production will start to decline, and then we're going to see a peak and decline in global GDP growth. Now, I don't think people realize, a lot of precious metal investors and regular investors don't understand, we take for granted oil, energy and oil. If you stop using energy, all energy for one day, you'll understand how important it is. You can't use any energy in the house, you can't use any energy to get to work, and you can't use any energy at work. It just goes to show you how important energy is as a driver, not only as a form of energy, but it also produces products. The oil produces a lot of medicine, cosmetics, all the plastics, synthetic rubber and tires, cleaning products. And how about the 11 million miles of paved roads? How can we do that with nuclear? You cannot maintain all these roads we built if we switch to nuclear. You still need petroleum. Again, this slide shows all the uses that we get from oil just not as an energy source. Now I want to switch. This is a chart on US physical silver investment from 2010 to 2018. I found this in the new Metals Focus Silver Investment Report for the Silver Institute in October 2019. And this is an approximation. They didn't give the figures, but I looked at the chart and I got an approximate. I made a new chart out of it. And it's about 880 million ounces of what Americans invested in physical silver bar and coin between 2010 and 2018. And about 60% of that was in coins, which is about 530 million ounces, and about 40% was in bars, about 350 million ounces. Now, if we look at this next slide, this shows the US Mint Silver Eagle sales in the same period, 2010 to 2018. And from this period, 313 million ounces of silver eagles were sold. Now, there's been this speculation by Ted Butler and other analysts that JP Morgan is buying all the silver eagles and all the silver maples. I don't believe that's true. I believe it's just mostly ordinary Americans buying most of the silver eagles, and they're also buying a lot of silver rounds, and they're buying Canadian maples. Because if we go back, again, Americans, US physical silver investment was about 530 million ounces of coins in this period of time. Now, even though investment has fallen, I believe we're going to see a big increase here in the next few years. Now, to summarize why I believe we're going to see a big move in the price of silver has to do with how out of balance the market is, the financial system, the stocks. A perfect example is comparing the NASDAQ to silver. Now, back in 2008, NASDAQ was only trading at about 2,800. That's the index. And when there was the 2008 market correction and recession, it went all the way down to about 1,200. It's now trading at 9,573. And a good technical indicator is the 200-month moving average. The NASDAQ is 153% above its 200-month moving average. However, if we look at silver, silver is only 3%. Again, the adage of investing is you buy low and sell high. Well, if we just look at that, we forget everything else, store of value, protecting your wealth. Clearly, any investor would buy at the bottom and sell at the top. So here we can see the NASDAQ is extremely risky and overvalued, and silver is very undervalued. Now, in conclusion, I believe there's good financial reasons, and we've got the precious metal analysts are pointing out all these negative financial reasons that we could see a big move in the price of silver. But it is amazing to see a financial guy like Scott Minerd to come out and say that he's now investing in silver. So these two reasons, we've got finance and we've got energy. I believe energy is the underlying factor that's starting to put a lot of trouble in the over-leveraged, debt-based financial system. And the troubles are just going to continue to increase because we're going to have more problems with energy. The canary in the coal mine is the US shale oil industry. And I believe we're going to see a peak in decline within the next year or two. And when there's a peak in decline in US shale oil production, which has been the leading growth in the global world economy, then we're going to see a decline in GDP. And I don't think we need much of a decline to start unraveling this highly leveraged, debt-based financial system. So thank you for watching this last video update on the coming exponential silver price movement. If you have not yet subscribed to the SRS Rock Report YouTube channel, please consider doing so. Thank you.